Hilton brings you new ways to stay, with experiences that let you capture the glory days. Introducing the Graduate Hotels. Each inspired by local college towns, these stays are always original and never boring. Get in touch with traditions all across the country and enjoy a stay that's a class above the rest. Book at Graduate Hotels with Hilton Honors Points at Hilton.com. It's a win-win. Hilton, for the stay.
Reality radio for a really great future. We're talking real money.
Once again, it's the podcast. It's the video cast. It's the combo cast of talking real money. Hello, everyone. Welcome to the arena where Tom and Don will talk about really important stuff that affects your bottom line. You don't want to miss it, so everyone gather around the podcast listening device. I can't even tell them what to gather around. It's not gather around the radio, gather around the television, just gather around that phone. Maybe a smart speaker. You know, you can tell your smart speaker to play the podcast Talking Real Money. Did you know
done
that?
it. I've done it to embarrass my daughter when she has friends over. It works every time.
And you know how much your friends love our show.
She has a friend that likes the show, so that makes up for the rest of them.
I am Don. That weird dude over there in the Model Aircraft Museum is Thomas C. Cock, the Museum of Military Aircraft in lovely Woodinville, Washington, right next to the winery.
Oh, by the way, that's a good point. I just thought of that. There are no like civilian type aircraft. I'll have to do one.
No. Yours is definitely the Military Model Aircraft Museum.
You're the first guy that's ever said that.
Yeah. And he does daily tours for a small donation.
It's a good idea too, by the way. Actually, as long as they don't look too close at the poor workmanship, we're okay.
I am full of them. Well, they're too high. Only invite old people and make them leave their glasses at the door.
Look at that.
It's the Presbyopic Military Model Museum.
There's a couple that turned out well, but out of the 36 or whatever it is, no.
Presbyopia.
Yeah.
It's time for the wearing of the wisdom glasses.
Yes, you're so smart now.
These are the expensive Amazon $4.95 blue blocking models. $5 a pair.
Remember, I have so many of them laying around. I don't remember when or where I bought mine. So.
I just go back and it says, you've bought this before. You want to buy glasses again? Apparently you break them all the time. Yes, I'll buy more glasses.
Give me 2 or 3.
Here's what we want to talk about today with you, our lovely, lovely listeners whom we love with all of our hearts. Thank you for being there. We want to talk about dumb stuff. The dumb stuff that you do. And you know you do. You may not do it, but at least, you think it. And that is doing the opposite of what you should do, which is buy when prices are low and then sell after they've gone up a lot. No, we tend to want to do that backwards, Tom.
Well,
why is that?
Well, why is that? And we know we do because there's a company called Dalbar Research that actually looks at the money that goes in funds, money comes out, can tell that fewer apparently, there's just another piece on target date funds that found that fewer people are moving their money around once they get into a target date fund. So thank goodness for that, because we know that all of this turns out to be emotional. The emotions generally are giving you bad signals. And I'm always fascinated when I hear from business people say, well, I rely on my intuition. Not me. I rely on the numbers because my intuition been wrong many other times when it came to other
Well, now let
decisions.
me interject there too.
Well,
here's a failing of our brains. Our brains tend to remember big things like big bad things or big great things. We tend to remember when we got something incredibly right, and we forget all of those times we didn't get it right. Our intuition said, oh, it's going to go down, and it didn't go down. So our brains go, tamp that down. I was wrong. I don't want to, my ego can't take that. So we accentuate the positive eliminate the negative. That's a song, isn't it? Yeah, I think it is.
Yeah, okay. Yeah, I was going to sing it, but not allowed to. Yeah, no, again, okay. So, but let's talk about some of the reasons why.
You bring your brother on to sing for it. He could be the official Talking Real Money singer. He needs a gig.
Yeah, exactly. So
we could make that the official Talking Real Money choir chair.
I think he'd be better in the lobby, and when people come in, he could pick. They could ask. He could do show tunes, whatever it is. But
no.
He didn't like
the
that
Model
idea.
Military Museum, it would have to be military songs only.
This is gonna be like the 1940s.
No! You can only do
World War I over there.
The Air Force hymn.
Over there.
No.
Off we go.
There you
into
go.
the
Off we go into the Wild Blue Talk Show. Come back to the podcast.
Oh, sorry.
We're talking about why people do dumb things, why they buy low and sell high.
Yeah, and we know again. So if you think that you don't, God bless you. The reality is you probably have at least considered it.
Yeah.
Because your brain is just, your emotions are taking over. But why? Okay, well, this is an interesting piece actually, and we do try to spend some time on the behavioral part of this to help you get through it. And this article actually came from our friends at Acorns. We like Acorns. We haven't talked about it much because I like it because it's a disciplined way to save and invest. It requires nothing other than you hooking up your bank card to them. That's it. You don't have to wake up and say, I want to put more money in the market. It's a rounding service. You make a purchase, money goes in.
It's perfect for young people.
It's
just perfect because it's a way to force savings when all you feel like you can do is spend.
Yeah.
It forces just pennies of every sale to go into something that over time, I mean, can be mine is thousands of dollars, and I haven't added anything to speak of.
It simply goes in. So, I mean, a few of the things, and the article does spend some time talking about social media, which is just a horrible, horrible place to get long-term rational type advice. It gets people worked up. They by the way, they tend to get worked up about things that the other people that are on there with them are worked up because the social media sites, as you may or may not be aware of, are putting you together and showing you the same things over and over again. It's tricky business. But the other one that I find interesting, Don, is a herd mentality. We tend to herd when things get volatile, says the Scott Nations, who's the president of investment volatility analytics firm Nations Shares and author of The Anxious Investor, which is pretty good. Investors, he says, get more confused and anxious as markets are falling. Well, first of all, markets aren't falling. They have fallen. So the herd mentality is a big one. He talks about selection too, which I just mentioned it. We have a tendency to get into relationships or discussions with like-minded people, and then we hear from them that they're going to do something, and then we think we need to do something, and none of these things turn out well. I mean, for the most part, because we get sort of feeling like this is my neighbor's doing this. I got to do this. So what do you do? What do you do when you realize that this is a problem? Number one, I think the biggest thing you do is you realize that we all have biases, right?
Bias.
We all do. We all do. I mean, I'd love to say that I'm an independent thinker, and I come from some. There's a reason there's military planes up above me here. I come from somewhere, right? So I've got my biases. I like to believe I do.
You didn't just sprout from that chair.
Just popped up this afternoon. Yeah. So, I mean, and every time I'm making a decision, do I sit down and think, well, wait a minute, is this because my dad told me in 1970? No, I don't. But maybe I should, and maybe I should know where that bias comes from. I think that's a biggie. Number two is as you get older, sometimes you change. You get more conservative. You get older. You sometimes get harder to, I just read that great book about John Bogle. He was a bit cantankerous. He was a bit of hey, isn't that a blue sky? No, that is gray. He was kind of hard to change what he believed. And that can be a problem sometimes
He was
too for
rigid.
People. He was rigid.
He was stone cold rigid.
Mm-hmm. And we interviewed him.
He believed what he believed. He believed what he believed, and he wouldn't hear anybody else's beliefs.
No, he wouldn't. And later in his life, I think Eric Balchunas points out that he was a guy who said no initially, and then oftentimes he'd sort of come back from that a little bit. Good for him, right? But what do you do when this all comes up, of course, because when markets have fallen, people have a tendency to want to do something, right? They just feel like they've got to. And we've talked about this so many times. We know the people that don't, they had a plan. They had a plan, and they knew that if they stuck with that and they had the right discipline, a multi-year plan, not just one through the end of this year, but a financial plan that looks at many years. Multi-decade. Yeah. They have a tendency. And then the other ones that are successful, frankly, they know how to tune most of this out. They know that it's noise, and by the way, I think it's harder and harder today. I think there's more noise about financial stuff than there's ever been before, whether it's like this podcast or whether it's radio, television, writing, the internet. It's all out there all the time. It's pressing on you, and it's telling you to do something when most of the time it makes sense not to do it. So this is a very complex topic. I love, for example, Jason Zweig's book, Your Money in Your Brain, because he walks through some of the difficulties that we all face. And there's not one right answer when it comes to your sort of mental health around money. I'll put it that way.
No, but the right answer, though, is probably to always have the plan. That's the right answer. You need to know where you're going and how you're going to get there, and recognize as part of that planning process your own human foibles and account for those in advance. In writing, force yourself to be disciplined. Or hire somebody who will force that discipline. That's the way to succeed. You can't let your emotions control these very important investing business decisions. Your gut needs to be ripped out of it.
I love the writing part that you said. No, that's good because, as you may know, I read Atomic Habits, which I loved. And one of the things they recommended, because this is something that I battle with all the time, to sort of have better eating, diet, weight thing, is to have a food diary, which I've used now for about a month, and it really works. It's fascinating because you got to write down everything you eat. It's like, should I be eating this? No, because I'm going to have to write it down, and I'm going to look back and say that was a bad decision. So I love the idea of writing things down, putting them in writing, and that'll help you stick to it, I think, better. Really will.
As many of our listeners do. They put things in writing to us at talkingrealmoney.com. They send us questions like you. You send us questions. You know why I look down? This is a bad habit when you're doing a video show, because Tom is on my screen right down there and the camera is right there. So to be polite, you want to look at the person you're talking to.
Sure.
But he's not really him. He's some image of himself. He's an illusion.
Not feeling.
You are
good.
what matters.
You're good today.
You're important to me. Anyway, we have a really long one, but it's worth it.
Okay.
This one is so worth the length.
This is standing between me and my lunch, so let's go.
We're going to have fun with this one, though.
I'm going to lean back. You go ahead and read it, and then when I'm ready for me, let me know.
Right. I may chime in along the way.
Okay.
Because I tend to do that. Hello, guys.
Hi.
After listening to your recent comments on cryptocurrency,
no,
I thought I would message you to point out that your hate appears to have reached a new low.
Well, doesn't hate reach a high, not a low? But okay, whatever.
No, you can have low hate. Deep, dark, bottom of the barrel hate in a cave.
All right. Okay.
I was under the impression that financial advisors, especially ones like yourself that promote themselves as educators, was to help folks like me make better investing decisions. Yeah.
I thought we were.
Okay. Yeah. We still agree. Okay. We agree with you. Yeah. Still, at that point. As of late, you seem to feel your role is somewhat greater than that of an advisor.
Ooh.
It appears you would like to make the decision for everyone. He's calling us baby Putins.
He's calling me a referee again. Yeah, I'd like to make a decision for everybody.
Again.
I'd make that decision, right or wrong. Yeah, go ahead.
Yeah, i.e. prevent Fidelity from even offering their customers the option to invest in Bitcoin. Or even make the decision for all of the United States to just ban cryptocurrency like communist China has done. I have to be honest with you. Your justification. Oh, God, listen, this is great. Oh, yeah. I got to go back and repeat that. I have to be honest with you. Your justification for why cryptocurrency should be banned is not very persuasive.
I don't think we ever said banned, but okay.
I don't think I said banned, but I think it's a banned idea. Oh, bad idea.
Oh.
because experienced Warren, Charlie, Tom, and Don say so. As you pointed out in your recent episode, not many have more experience than the four of you.
Not
That is
combined,
true.
that's for sure.
Combined, it's like 3,000 years.
That's before Christ. Here we go. Yeah. Okay.
That may very well be true. However, it is also true that not many politicians, this is so false equivalency. That not many politicians have more experience than President Joe Biden.
That true again. I think he's right there again.
Okay.
Yes. Okay.
All of that experience may have served him very well, but it hasn't served the rest of us very well. Political commentary, ladies and gentlemen.
I'm going to go back to what you did at Retire Meet when somebody brought up a question. You said no politics. And everybody, a bunch of people got, yeah, Don for governor, Don for president. Yeah, good.
I also think it's true that continued adoption of Bitcoin would not be very good for Warren and Charlie. Their current advantages would be as valuable as they are today. I will let you think about how continued Bitcoin adoption would impact your business. Ooh, he's saying that we have a vested interest in being anti-Bitcoin.
Yeah.
Continuing.
Yes. Oh, this goes on.
Continuing. If you would really like to make the case why Bitcoin should be avoided, at least make the effort to learn how Bitcoin is different than other cryptocurrencies. Pausing again. This is the typical argument. You don't understand it.
I put it all with the guy in Miami, the governor, the mayor of Miami's.
Let me tell you, sir, I understand it all very well. I have read paper after paper on Bitcoin and cryptocurrencies. Bitcoin is in very few ways different than the vast majority of cryptocurrencies. Very few ways. Yes, there are differences. However, we continue. Often you mention that Bitcoin is a get-rich-quick scheme. Do you realize that over 60% of all the Bitcoin has not changed hands in over 1 year or more?
Not hold it for an entire year? Wow.
Do you realize that there are people who've owned stocks for 30, 40, 50, 60 years? That, again, false equivalency, sir. None of us knows whether Bitcoin will continue its current record level of adoption or not. Thank you. That is a true fact. But history does teach us. Oh, you're a student of history. Come on. History does teach us that the U.S. dollar will not last forever. Given sufficient tolerance for risk, should I really be concerned about volatility if I feel the upside potential outweighs the risk? That's the end of the question.
Yeah,
Tom.
I'm going to go first and you can go next because this is an area you spend more time on than I do. Here's the reason that I do not favor it in retirement plans. I don't favor it as an investment, but I don't favor it, especially don't in retirement plans. Here's why. Most people, no offense, most people do not spend a great deal of time making decisions on how to invest their retirement plans. We know this. Survey after survey shows. Or they make a decision and they might spend a little time up front and then that's it. They never think about it again. Money's in their and by the way, most of the time that's better than timing. So most people part two of that is most people, no offense, haven't spent much time doing it because they don't know anything about it. They don't know the difference between a stock and a bond, for crying out loud. So to throw something like crypto in, which is completely speculative, again, it's not an investment in a tangible. The stock has earnings, whatever growth. A bond has there's something there. Crypto is simply what the next guy says it's worth. You can't argue with that. That's the truth. So to put that in a retirement plan where people either have no education or very little and don't make good decisions, that's why I'm opposed. I'm dead set opposed to it. And I think Fidelity, frankly, is pandering. That's all it is. They're saying, oh, well, people really want this. You know what? People want a lot of things. And I'm not going to go into all the things I want every day that I can't get. So
my list is long. I'm going to do mine.
The thing is, that's why. So you want to go buy Bitcoin or crypto, you go take every dollar you ever had. That's fine. You go ahead. I got no problem with that.
Tom, people who own crypto do not like us saying we hate crypto.
Why?
Because because we have an audience of people who are going to say, oh, maybe I won't be the greater fool for this guy. Because remember, these people who own it need the greater fool.
Yes, they do.
Without
That's
the
right.
greater fool,
Which
they
is
will
what? You
lose.
need to explain what that means. The
greater fool theory. It's like, I buy something, I tell you how wonderful it is, and you buy it so that my value goes up, and you tell some other greater fool how great it is. It's the problem behind multi-level marketing. Mm-hmm. Eventually, you run out of greater fools. You run out of people who are in your downline. You can't. It would be the population of the earth eventually to fill that gap. So here's the thing. I'm going to just a couple of points. One, you use the word that we think is probably and we mentioned it at the beginning of this podcast, the word that is probably the most dangerous word in an investor's vocabulary. What is that word?
Guaranteed? Oh, feel.
Feel.
Yeah.
You said, should I really be concerned about volatility if I feel the upside potential outweighs the risk? Feelings are not a way to vet investments. Who cares what you feel? What do you know? You know nothing. And don't lie because you know nothing. You know how they work, you think. And maybe you do. Maybe you're one of those brilliant little tech minds who totally gets the whole blockchain concept and you can do all this stuff. That's great. Good for you, sir. But here's the thing. You say the US dollar will eventually collapse. When is eventually? Think about it. It's been around for a long time. And it's been 100 years, one of the major currencies on the planet. It continues to be the most popular currency in the world. I don't think it's near, I could be wrong. I don't feel like it's near a collapse. What does my feeling mean? Nothing. It's what I feel. However, if you were the U.S. government and you had a currency, which we need, by the way, Tom, would you argue that we don't need a national currency?
No, quite the opposite. We do need.
We need a means of exchange that we all accept. We all accept it. Not only do we all accept it, even Russians accept it. In fact, they kind of like it more than the ruble.
Yeah, exactly.
But should the U.S. government allow you, sir, in your basement with your fancy Xerox, I'm not even going to use the term Xerox, just fancy laser printer, should the U.S. government allow you to create your own currency? And give it out to businesses and say, my currency, sir, Mr. Business, I'm buying a pizza, and my 20 what's his name, Merv? My 20 Merv dollars are just as good as those US dollars. Should that merchant take that Merv dollar?
Think
about that for a minute. Yeah, that would be illegal. So it's illegal for the government to tell you can't make fake currency. And yet the government should have no say in crypto, which is a currency, you say? Gee, I think that both the communist Chinese government, U.S. government, and all the other governments in the world have a vested interest in seeing that there is some sort of control over a new currency, something with value. And by the way, something of which there are now 10,000. Does that make any sense?
No.
10,000 currencies. You're just betting that Bitcoin's the winner. But the other makers of all the other fakers, they're betting that theirs is the winner. Either that or they're just going to do a rug pull. I'm going to put it out there. Rug pull. Get all the money. So your arguments, and I'm confident you're very young. I am. Because I have not met an older person who isn't pandering. Rick Edelman. I haven't met an older person who isn't pandering to make money for him or herself, who actually buys this. Somebody who has some experience in the financial services industry, in economics. They just don't. They don't buy it because it's a solution without a problem. The U.S. dollar is strong and will probably, at least for my life, continue to be very strong. We don't know what's going to happen, though. These are all feelings.
And that's why, by the way, all of that is the exact reason why we say bad things about it. But stronger than that, I don't think it should be made easily and readily available to people in their retirement plans. I just think that's a very poor idea. You can go buy it other ways. If you have to have it, then go buy it. But in those plans, no.
Merv, if you want to own it, you can.
Sure.
Good for you. If you don't mind losing your entire investment, which I truly do, I would never put my money in something in which I could lose 100% of my money. Never do it. That's foolish investing. But if you want to put money into something that could go to zero, and it can, you go ahead. We have that freedom. God bless America. We have that freedom. We have the freedom to lose everything if we're so inclined to do so. Go for it, man. There. I think I spoke my piece.
Feel better?
I do. I really don't like crypto.
No.
That's my feeling. I don't like it. I feel it's a bad choice. Are my feelings any less valuable than yours? No, they're identical. They're feelings. They're worthless. But thanks. Thank you all for being a part of Talking Real Money, the podcast, the video cast, the all-purpose cast. That guy right over there chuckling, that's Tom Cock.
That's funny.
Anything you want to say before we go?
No, I do. I will say this about that. I will say that the people that we know that have invested in cryptocurrencies believe in what they believe very strongly, and that makes me very, very nervous.
It almost feels cult-like, doesn't it?
It does.
Yeah,
and
it does.
You can't shake them. Again, that's fine. Call me in 20 years. Maybe I'm wrong, but it's not a place that I would put my money today. No way.
Well, based on my now 4 decades of experience in this business, I would guess, Merv, you're probably younger than my experience in the business, but I could be wrong. I've seen so many things that at the time I said, call me in 10 or 15 years, but I'm pretty sure this won't be here anymore. And in almost every case, they weren't there anymore.
The list is long. We've seen it. The list is long. We've seen it. So
people have been scammed since the beginning of time.
Indeed.
Tulip bulbs. Yeah. Tulip bulbs in Holland. Think about it. Thank you for being a part of our little podcast, our video cast, our combo cast. I'm Don. Tom's over there in the museum getting ready to open it up for the afternoon tour. And I'm just going to be here in Florida editing and talking real money.
We hope you realize that the information provided on Talking Real Money is for informational, educational, and hopefully enjoyable purposes only. Providing personalized financial planning or investing advice takes time, so please consult with a really good fee-only fiduciary investment, tax, or legal advisor. We know a good one. Investing must always involve risk. In other words, you can and probably will lose money at times. Also, as much as you want it, no one can accurately and consistently predict the future, so past performance doesn't tell you a darn thing about what the future will bring. Unlike many other programs that say something similar, Talking Real Money is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Apella Capital, a fee-only registered investment advisor. Thanks for listening, and please visit TalkingRealMoney.com for more information and disclosures. That's a wrap.